we've done these type of things for our own people, for other people. We've done it for Nelson at his think tanks, and we're constantly refining it. So don't be afraid, again, to give feedback. I need to do this a little bit differently next time, I realize. But a lot of this is caught rather than taught. And you find that out, and I keep referring to the third chair situation. We've committed to people sitting in the third chair, where we introduce them as peer review people, because that's what they're doing. They're reviewing what we're doing before we release them out into the world. So example, Kyle, I think he's the newest. We have newer people, but they aren't here right now, like Cheryl and so on and so forth. But Kyle would have come onto the organization. He sat in on at least 100 appointments, actually catching what we were doing, rather than us just sitting down and having a training session with them. And that's what I tried to do with you earlier. So right now what we would like to do is do another exercise where now you have an actual client. Could I get the switch? And I saved this for a reason. Can you see line 43 up there? I know I'm working on this. Line 43 is 85,546. So if that was, I was pretty close to that, wasn't it? 85,546. Then and this is like magic to clients. I guarantee you that they will never have seen this before, because I don't recall anybody saying this. I make myself a little cheat sheet like this every year for taxes, and this is simply the 2014 tax brackets. So this is a 2014 return, and I say, hey, I don't know if you realize this, but we're in a progressive tax bracket system here in the United States. So you don't pay the same amount on all that 85,000. On the first, from zero, and then I'll refer to this. This is a single person, from 0 to 9,075, and I write it on here. You pay 10% to the IRS. And then once again, don't presume they understand. So I reiterate this. So on the first 9,075 of that number, and I point, you pay 10% to the federal government. Then from 9,075 up to, I think, 36,900. You'll get to memorize these after a while. 900. And then I reiterate this. Now, not on all your money, and I usually do this. Just on the money between here, you pay 15%. Then from 36,000 to 89,350, and then I do this. I do an approximate position that it would be in the tax bracket. You see that? That's about 4,000 down there, so I guesstimate it. And then once again I do that. So I say between 39,600 and 85,546, and I use this phrase every time. It's the biggest jump in the tax brackets. It goes to 25%. And then I say, then there's a 28, a 33, a 35, and a 39.6. And I just simply say, we don't put those up. I say, if we find somebody in those brackets, we're glad to actually put those up later on. But I think that makes most people feel comfortable that they know you're talking to people in these brackets. Then I explain to them that when we go back here for revised, I simply say to them, and you'll get good at this, you'll say to them, now, you have some income that's going to come in later on, what would you like that income to be? What do you think most people say? I go, we're going to revise when you want to quit working or retire for the in and the out. What would you like that income to be? What do you think most people say? Yeah, they say 5,100. And then I say, now remember, that what goes in your checking account. So you actually make more than 5,100 gross. So can you see that if you're going to have 5,100 coming in when you're revised, unless you have some strategies to minimize taxes, can you see how you're not going to go down in the tax bracket? And people, I mean, it happens almost every time. People say, well, I always heard that I'm going to pay less taxes when I retire. And then I simply make the statement, why do you think you were going to pay less taxes? Well, that's because people told me I was going to pay less taxes. I said, okay, I can get you to pay less taxes before you leave today. And they say, oh, okay, how are you going to do that? We're going to change this number from 51 to 2,100. And they don't think it's as funny what I said. And so then I said, well, what we're going to do for you is we're going to do some active tax planning. And I say, can you see now that you could actually take some money out of these positions, tax-deferred positions, tax-deferred positions. Can you see how you have room to take $4,000 out and still pay 25%? Now, if they can't see it, and most people can't see it, I say, well, wait a minute. You said you wanted to stay 5,100. So if you take 4,000 out today and pay 25%, or you wait till you retire and take 4,000 out, what are you going to pay in taxes? And if they understand that, what are they going to say? 25%. And then I come back with this little phrase. That is, if they don't raise the tax brackets. And then we say things, you guys have used phrases like this, I'm sure. I asked, so Dennis, taxes we know can only do three things. They can go up, they can go down, and they can stay the same. Those are the only three things we know they can do. What do you think they're going to do? Go up. Now, I don't know about you, but we don't always get that answer. And then now we know that in future meetings, we'll have to go to those examples that I showed you earlier. Why the sense of urgency? That gets captured. Those kind of things get captured by Kyle in the perfect memory, because I can't have a good conversation with the person and say, oh, wait a minute, hang on, I got to write that down. Because that's rude. Plus, if I try to write it down, I'm not listening to them. So if you heard me in the teleseminar, somebody asked a question, or I think somebody, Jenny, wrote in and said, what's the number one thing that I could add to change my practice? It's adding the client coordinator. Now, John calls it a junior associate. It's whatever, but a person that's in the meeting that can capture the perfect memory. John?
In regards to what Bruce was talking about with tax brackets and having people realize lower tax bracket in the future, I'll make the statement to them that if you understand that your tax bracket is directly correlated to your lifestyle, because of the way we have saved and built up money and then have to take money out, if you think that when you get to retirement, you want your lifestyle to go down. So, the old thought process was, when I retire, I'm going to live on less because I won't have my house payment. I'll slow down. I won't really do much, so I'll stay at home. That might have been the thought process 20, 30 years ago. If you start talking to people about what do you want your lifestyle to be like in retirement, we know very few people that want their lifestyle to stay the same or go down in retirement. Otherwise, why would they retire? That's sometimes their comment. So if you say, okay, so you want your lifestyle to at least, at the bare minimum, maintain where you're at, and probably you'd like it to maybe increase or expand, at least for a period of time where your health allows it. And I'd say, yes. So then how are you going to pay for those things that you're going to want to enhance your lifestyle with. You're going to have to utilize your assets. And if you've done a good job of gathering their financial picture, and you can then show them, based on where your assets are at today, if you operate in that manner, it's going to be impossible for your tax situation to go down, because you're going to be pulling money from places where it's going to go on your tax return, and automatically, because we're in a progressive tax system, it's going to go up. So it's not that they're wrong, because their tax situation is really all about them, but the fact that they want to use their money is now going to penalize them. And they don't think about utilization when they're accumulating money. So you've got to get them to realize what's more important, accumulating the money and saving on taxes now, or being able to utilize the money and figuring out how much of that is going to go to Uncle Sam and how much of it's going to go to you. So that lifestyle tandem with tax brackets, for a lot of people, they say, okay, yeah, I want my lifestyle to go down, so now I got to figure out how I'm going to save on taxes.
So during this exercise, it's going to take a little role playing here, and now you know it's just a single person, so you can role play. And that, I did do it on purpose to take a single person, so you didn't need to talk to the couple. Use the tax conversation sheet. Does everybody have a blank financial picture? And then you can make up some of the numbers as you're taking them. Is this going to work, or have I totally confused everybody because of this thing? Okay, so break it into groups of two. I'm going to show you that this should only take about 10 to 12 minutes to complete. If it takes longer, then we'll deal with it later. All right, I appreciate your patience on this. Now I feel a tremendous gratitude that you didn't revolt in that kind of a messy situation, and but I hope you expanded your thinking just a little bit, that you can use this as a tool to not only get more information, but to develop a better relationship by the questions you're going to ask during this period. And Sean brought up a really good question up here. This is why I love these kind of sessions where we just talk about the real life situation. Sean says, I don't really think I'm paraphrasing now. I don't think I'm really going to do this. And then Ryan, who must be, he has his trust, said, I just don't think you want to do it. And Sean said, yeah, I think you're right. But then Sean brought up a really good point. He goes, this isn't me, but Matt's a number person, and I can see you in the meeting. You take over this part of the meeting. That's the unique ability. See, and you saw the not working in your unique ability with me, with how I messed up that presentation right there by not paying attention to the details like Jenny pays attention to the details. So Kyle and I have actually talked about this, and we're transitioning to this in a meeting, because what happens in our organization is Kyle will then do this and learn the business for 6, 7 years or so, and then and this happened to Robbie, right? So Robbie and I used to work together. So Robbie learned the business, and then as we progressed further and further on, I stopped taking the financial picture 100% of the time, and then Robbie would ask the questions. And so he's getting the drill and rehearse and practice. So he goes from a consciously incompetent at the first to consciously competent, and the more he gets to drill, rehearse, and practice in a real situation, he becomes unconsciously competent. So now Robbie doesn't have to think about this anymore. I know it looks like I have to think about it the way I was doing it up here today, but it's because I'm kind of out of my element, switching back and forth. But I hope I'm unconsciously competent with this. So now we're starting to transition with Kyle doing that, and he'll do it a few more years. Then he'll transition out to our cash flow specialist, just like Robbie's doing it right now, into our cash flow specialist, when he has enough experience to become unconsciously competent. So I'm trying to show you how we work on our business and build our business from the inside from one step to another. Now, I'm stepping into a cash flow situation also with E3 Wealth because I don't ever sell any products in the maritime, but now Steve and Mike bring me in as a cash flow specialist in that situation. And I actually like that also. And that is my unique ability. I hope they see that. Okay, so now what we'd like to do is I hope you're seeing the value of this. And Tom has been real quiet today, and I kind of miss it. We had a great conversation last night, and he made the comment about coaching. And and a lot of people are getting coaching here and so on and so forth. We've done a lot of coaching, and we're going to talk a little bit about coaching programs that we might have to offer you. And we'll talk about that a little bit later. We can do it privately also. But for this session now, what I'd like to show you is how another way to attract high-quality clients is by expanding what you do just a little bit in what we think is the thing that we've been working on for about 2 years, the generational game changer or planner. And with our help of our estate attorney, Tom Mickler, Mark Benson, and Robbie Shilley, they've been working on this project together, and it's really starting to take off. So Robbie Shilley's going to go over and Mark are going to go over the generational planner.